Question 1. What is accounting? Accounting is the process of identifying, recording, classifying, summarizing, and interpreting financial information to make informed business decisions. Question 2. Define liability. Liability is an obligation of a business to pay money or provide goods or services to another party in the future. Question 3. What are the 3 golden rules of accounting? Personal account, debit the receiver, credit the giver. Real account, debit what comes in, credit what goes out. Nominal account, debit all expenses and losses, credit all incomes and gains. Question 4. What is the accounting equation? Assets equals liabilities plus capital. Question 5. What is a journal in accounting? A journal is a book of original entry where all financial transactions are recorded chronologically. 2. Financial statements. Question 6. What is the purpose of financial statements? Financial statements provide information about a company's financial performance and position, helping stakeholders make informed decisions. Question 7. What are the components of financial statements? Balance sheet, profit and loss account, and cash flow statement. Question 8. What is the difference between revenue expenditure and capital expenditure? Revenue expenditure is incurred for day-to-day operations, while capital expenditure is incurred to acquire or improve fixed assets. Question 9. What is the format of a balance sheet? A balance sheet is prepared in a vertical format showing assets on one side and liabilities and capital on the other. Question 10. What is meant by depreciation? Depreciation is the reduction in the value of a fixed asset due to wear and tear, obsolescence, or usage over time. 3. Ratio analysis. Question 11. What is ratio analysis? Ratio analysis is a quantitative method used to evaluate the financial performance of a company by analyzing relationships between financial statement items. Question 12. Define current ratio. Current ratio equals current assets/current liabilities. Question 13. What does a debt-equity ratio indicate? It indicates the proportion of debt and equity used to finance a company's assets. Question 14. How is the net profit ratio calculated? Net profit ratio equals net profit/revenue times 100. Question 15. What is the ideal current ratio? The ideal current ratio is 2:1. 4. Cash flow statements. Question 16. What is a cash flow statement? A cash flow statement shows the inflow and outflow of cash during a specific period, categorized into operating, investing, and financing activities. Question 17. Differentiate between operating and investing activities. Operating activities are related to the core business operations, while investing activities involve the acquisition or disposal of long-term assets. Question 18. What is the formula for cash flow from operating activities? Net profit plus non-cash expenses minus changes in working capital. Question 19. What is free cash flow? Free cash flow is the cash available after accounting for capital expenditures required to maintain or expand the asset base. Question 20. How do you calculate cash flow from financing activities? Cash flow from financing activities includes transactions related to raising or repaying capital and debt, e.g., issue of shares or repayment of loans. Analysis of financial statements. Question 21. What is the meaning of financial statements? Financial statements comprise of the profit and loss account, the balance sheet and the notes forming part of the profit and loss account and balance sheet and the cash flow statement. Question 22. What is financial statements analysis? Analysis of financial statements is an in-depth study of financial statements to diagnose the financial health of an organization. It helps to analyze the profitability, solvency, and efficiency of an organization. Question 23. What are tools of analysis of financial statements? Ratio analysis, cash flow analysis, common size statement, comparative statement, and trend analysis are some of the tools of analysis of financial statements. Question 24. What is horizontal analysis? Horizontal analysis means analyzing the financial statements for a number of years with reference to a chosen base year. It is also called trend analysis or dynamic analysis. Question 25. What is vertical analysis? Analysis of the ratios relating to 1 year for one company and its different department, or analysis of the ratios of different companies for the same year are called vertical analysis. 6. Partnership accounting. Question 26. What is partnership accounting? It involves accounting for the financial transactions of a partnership firm. Question 27. Define partnership deed. A partnership deed is a written agreement among partners specifying the terms and conditions of the partnership. Question 28. How are profits shared in a partnership? Profits are shared according to the ratio specified in the partnership deed. If not specified, profits are shared equally. Question 29. What is goodwill? How is it calculated? Goodwill is an intangible asset representing the reputation of a business. It is calculated using methods like average profit or super profit. Question 30. What happens if a partner retires? The retiring partner's share of capital, goodwill, and revaluation of assets and liabilities is adjusted. 7. Miscellaneous questions. Question 31. What is meant by bank reconciliation statement? It is a statement prepared to reconcile the differences between the cash book and bank statement. Question 32. What is TDS? TDS stands for tax deducted at source, a mechanism where tax is deducted at the time of making payments. Question 33. What is a provision in accounting? A provision is an amount set aside to cover a known liability whose exact amount or timing is uncertain. Question 34. What is the accrual basis of accounting? Revenue and expenses are recorded when they are earned or incurred, regardless of when cash is received or paid. Question 35. What are contingent liabilities? Contingent liabilities are potential obligations that may arise depending on the outcome of future events. Additional questions. Question 36. Explain the dual aspect concept. Every transaction has two effects, a debit and a credit. Question 37. What is a trial balance? A trial balance is a statement that lists all ledger balances to check the mathematical accuracy of the books. Question 38. What is amortization? Amortization is the gradual writing off of intangible assets over their useful life. Question 39. Define reserves. Reserves are portions of profits set aside to strengthen the financial position of a company. Question 40. What is an error of omission? An error of omission occurs when a transaction is not recorded in the books. Exam tips. Understand the basics of each concept. Practice solving practical problems regularly. Familiarize yourself with the exam's marking scheme. Stay updated with any changes in the syllabus. Manage your time effectively during the Viva and practical exam. By reviewing these questions and answers, you'll be better prepared to face the Viva confidently. Best of luck with your CBSE Class 12th Accountancy Practical Exam.